Hello everybody and welcome to this live trading session. My name is Pedro Mejias, you can read on the slide, and my email address is pedro@tradictive.com. If you have any question or comment, if you're watching the recording or watching live, you can ask questions in the chat. We are multicasting right now in different platforms for the first half hour. Then the next half hours, we're going to be only on our website. Okay, so you better sign up tradictive.com and to enjoy the last section of the stream. Okay. Before we begin, to read the disclaimer, which go as follow. The following video clip demonstrations are for educational and instructional purpose only. Predictive provide these videos purely for the purpose of demonstrating the method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the result you may receive on using our products. All right, so today, as every Monday, we will look at some trading opportunities. In my case, I trade the euro futures, looking into the a little bit of different approach. I was looking at the liquidity and volume available. Okay, so all right, let's check out the euro. Let's go to the first trading view. You can see here trading view. This is the euro today. One of the things I like to do before beginning anything, beginning to trade or do absolutely something with trading is to see is to set my bias. Where am I gonna be buying or selling or not? Okay. And one of the things that I always like to check out is how the euro is performing against all other currencies. And one way to do that is to check out the euro index, for example. Okay. And the euro index in different pages will tell you where the euro is heading on today's session, if it's strong or weak. So that's one way to one tool you can use to actually understand how is the euro performing against any other currencies. But well, let's see. With the tool we have here in TradingView, we have the Trade with UFO. As you can see, you have the Trade with UFO um, indicator. You can see here the red circles and the red lines, and below you can see the green one. Okay, also you can see the climate indicator, which is for this time frame, 5 minutes, we have a little bit of an uptrend here. Okay, if you don't know, my trading method is to trade in very short term because I believe that I'm more capable of predicting what's going to happen in the next minute or seconds instead of trying to predict what's going to happen in the next hour or days, which I believe for myself something very, very unlikely to be successful at. So I prefer to predict very short term movement, which I can control more, I can control my risk, and I can, whatever you do, you can always use more volume if you want to take a little bit of more risk, right? So that's how you control here when you work at short frame, short movement. All you have to do is if you want to increase your profits is only increase your volume. That's the only way. It's not necessary to have a long movement to make X amount of money. You can do the same with a very short movement, just applying more volume. The results, I mean, in theory, will be the same, right? But in short term, you will know faster if you were right or wrong, and that's what it is. So it's like take the result instantly instead of waiting for days or month to get the same thing. So all you have to do is just apply more volume, and you will get whatever you were expecting in a day or two movement, right? Well, remember you can ask in the chat any question you like to do. You can also, as told you before, you can use my email address. If you have any question, let me show you the slide again, so you can have the email. Okay, there is the email. It's pedro@predictive.com. If you have any question regarding the service of Tradictive, you can contact support@tradictive.com. Okay. All right. Okay. What we're looking at here at the with the euro is, we look at the what happened during the day. We can see how it went from the opening. It has been actually on a downtrend, and now they have this move on the upside, very strong. You can see how strong it is. You can see the climate indicator showing us that it's actually confirmed uptrend here. And one of the things I like to use in whatever I'm looking at is the big WAP, is this Y line here. Okay, it's Y line. It shows me what is believed to be the fair price of the day. You can see how price always when it reaches nearby, then it goes down because it's a buying area. Okay, for algorithm traders, for um, big buyers, big sellers, okay, big participants, they will always tend to look at this price. But besides this big watt price, we have the big watt deviations. We have this case I have two, okay, two on the top and two at the bottom. They are very useful as well. I will not trade if the price is outside this area because it will be it won't be a very strong movement, okay, most of the time. For example, I would never buy here or nearby the last one because, but depending is if I'm buying, I probably will buy here, 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 okay, on this deviation. But if I'm selling, I won't be doing it in this line, this red line, because it's like no, it's outside the range, right, the range of movement. So that's why I will never trade. If I'm selling, I won't be trading nearby this area, even if everything shows pretty good. Uh, Depending on your techniques, it might shows good or not, but I will never do that. I will never trade anything nearby or outside these deviation areas. Okay. Okay, so we see here on the open today, we have a little bit of sideways movement, then begins to move on the downside, and now it's moving up. So it gives us an opportunity for the selling. Okay, if we see that the volume actually indicate us this can be a good sell. You can see here actually in the TRADDICTIV indicator, we have a selling area here and a stronger one right here at the top. Okay, we can use that pretty good. I mean, it's a book trade. You can do it, and you will probably succeed. All right. But if we want to have more deep understanding of what's actually going on, um, let me show you my chart. Let me just let me go to the chart. This is not the one. Just give me a second. Okay, here we go. All right. Here we have the order flow chart, and let's see what it's telling us. Okay, today, see what is going on here. I'm gonna switch to candles. Okay, so you can understand it better because most people is used to candles. And it's the same thing we had in TradingView. Pretty much, you see the movement on the upside. You can also see the big WAP, this red line here, and the deviations, this blue and this yellow one, the same on the top. But we have something extra here, okay? Some extra information that's very useful. We have on the right side, this is the liquidity that is showing us what is the exact amount of pending orders in any given price. You can actually see this all the way up and all the way down. Okay, there's no limit on how many pending orders we can see here. That's very useful because you know where everybody is waiting for, the market makers. Where are they? What are they waiting for in respect of pricing? What price are they waiting for to get into the market? And we can see that just by looking at the liquidity. You can see there's 225 um, contracts pending here to enter, okay, on the sell side. And that's pretty useful information because we know exactly how much volume will be available at each price. But what actually moved the price is not these guys, okay? Not this guy that are waiting for the price to be filled. It's the aggressive traders who move the price because they take this liquidity which is available for them, they take it, and when they take one, let's say one price, it will move to the next. Okay, that's how you move the price, just by taking whatever is available here, and that is done by the aggressive traders. And that's what we need to analyze. Where are the aggressive traders going to enter, and what are they waiting for? Where is the liquidity available? They need many things. They need liquidity. They need volume. Okay, they need um, traders trap in order to move their price to their where they want to go. So there are many things that you have to consider when trading. Okay, it's not just formation or candlestick formation or Fibonacci or whatever you want to call it. That's actually fantasy um, in trading. All right, so just by making this pretty simple, all we need to do here is find where's the volume, where is the trading happening, right? What happened? And we see these red and green lines. These are actually imbalances of trades, meaning that the buyers, for example, here on the green ones, the buyers were more aggressive than the sellers, and in the red one, the sellers were more aggressive than the buyers in a significant percentage. Okay, I'm talking about um, I think it was more than 100% difference. So it's a significant percentages, right, of different pricing. You can see how price now is really close or right on the big WAP and starting to move down at that moment. But we need to find some volume where to put our trades and where to put our exits as well, right? And in the beginning on the session, we have this. Oh, sorry, this is not the tool I wanted to. Just give me a second. Okay, that now you can see it. Yeah, let me delete this. Let me just delete everything I had drawn before. Okay. All right, now let's highlight um, this area here. You can see in the previous session there was a lot of sideways movement, and the same here in the beginning, right? In the beginning of the session. So this is a very interesting move here, okay? And we can see how the price actually were rejected from this area, okay? Because there is a lot of volume here. Somebody was, taking many contracts in order to keep it for the next day, and that's what actually happens. And what we need to find out here is when this price range was broken, and we can see, for example, here it's when it begins to go on the downside. So that's an interesting point here. We have this one, we have this one as well, the different movement on the downside. But let's focus on the first one. Okay, it is this candle here that breaks all this sideways movement. You can see how actually it respect even on the previous session, right? Because it's volume. This is actually a real thing. Okay, it's not a fantasy. It's real. It's there. It's printed in the chart. And here we have the down movement. Okay, we're gonna use that as a reference to try to find our entry. Okay, and this is important because it is the moment when these guys that were accumulating here decided to stop. They decided, oh, let's stop accumulating here. Now it's our time to make some money, right? And they did it, probably did it. But remember that there's people losing here, right? There are a lot of buyers here in this area. They are actually losing a lot of money, and they're waiting for a second chance to get out of the trade. And when they do it, is when they are close to their entry, right? Break even or a small loss. And you can see that happen. You can see these arrows here, how they did it every time the price was close to the range, right? They did it again and again and again, and they will continue doing it until they don't have anything here. And we can see exactly how many orders are pending. You can see here a lot of more than 100 contracts pending to be sold here. Okay, we can see how this shift um, between the prices. So that's very powerful information that you can have only on future and looking at the order flow. If you're not looking at the order flow, you won't have this information at all. Okay. All right. Remember, if you want to have access to any of these tools, just send me an email, pedro@tradictive.com. You have my email right on the right top of the screen. Okay. Okay. So we have interesting point here. So let's look at what happened inside those candles. Let's look particularly the one that began the downside movement. Okay, it's the one we are going to analyze, trying to find what happened in this movement. Okay, you can see here when we're going up and then start selling and selling, and then make a huge trade here, 115 contracts. Okay, in one trade to push the price down. Okay, you can see how it actually works and have kept the price below that entry right there. So it's a very interesting um, trade they made here that we need to take into account. Okay, so what I like to do is just analyze the volume. You can see another here, 162 contracts, and I can find here some interesting facts in the analyzing the volume in this initial movement. Okay, we can see exactly how many contracts were traded. Okay, in these price levels in these particular candles. All right, that's why it's very important to analyze exactly what you need to see. Okay, you don't go analyze stuff that you don't need. You actually need to see what initiated this downside movement and where it happened and where it might be an opportunity for the losers, guys that were losing here, to get out of their trade. Okay, so I'm gonna highlight two areas here. I find very interesting. It's this one here, also this one here. You can see that there's 401 contracts here in this price, which make a big volume, and there's only 15 here. Okay, and below this 401, I found this 112 is the smaller one below the highest volume. So we have these two yellow lines, and let's see what happened in the future between these two lines. You see how the price entered always here and this get rejected. It have never been broken. You see, even now. So that's how volumes work. Okay, that's how volumes work. It works, of course, until um, these volumes area here are completely exhausted. They have no more resistance, and price can actually go higher. But at the moment, you can see how it's been respected all the way. So we have two trading prices where we can enter. And look at this. Look at the volume here on the on the right side, the liquidity, okay, is just below our yellow line. It's 129. So there's a lot of pending order waiting there to be filled. Okay, remember that this liquidity can actually be taken off the table at any time. Okay, because you can cancel the order, but it's there. It's because it's interesting. And the other line, you can see we have 100 right at the line, but about the line we have 140, which it is actually pretty interesting as well. Okay, we have like a validation or confirmation of what we were looking at in the chart. So that's very, very good, very positive for our trade today. So as you can see, the price were trading below these yellow lines, and it get very close here, but it didn't touch. And that's where we are going to try to get our trades. Okay. So the first things we like to do is just put a contract here. You can
Order placed.
put as many contracts as you wish, depending on your risk parameters. Remember that this session we only left half hour on the different platform. Then we're only gonna be on our website, okay, Trade with UFO. So you better be um, sign up there to see the rest of the streaming, okay. So the second entry, of course, is gonna be right below because we're selling, okay, we're selling. So I'm gonna sell here.
Order placed.
Right below the other volume area, okay, because we have this one that has been touched many times, okay, and this one has been touched just very low, and you can see the liquidity that is available on the top, on top of that, okay. Um, so what might happen? Well, price might just go down, keep going down, without even reaching our entry. That's one thing that can happen. The other thing that can happen is just price goes up, touch our entries, and go as expected and begin to goes down, or everything can fail and just open a trade and go high, right, or higher. So we need to either way protect our entry. We need to select an exit place for a trade. Okay, we won't be in this trade forever because, as you can see, it goes up and down all the time, and will continue to do so forever. So all we have to do is select a place to exit, and to do that, there's similar technique as I use for entry. You can use for exit as well. Okay, because I will know where the prices might go. Okay, that's it's very good because you can get very precise exit and with a very high successful rate. Okay, okay, I got a question here. I don't know who it is. It's saying that the numbers is cut out on the right, so you can see the entry. I mean, the entry is here. Is this blue box? I think you can see it. And the I don't know what numbers are you're not looking at. Maybe the liquidity numbers. You can put it on the chat. We know, so I can move the screen. Okay, let me know. Okay, so now that we have our entry or two entries, okay, because we can have different entries, so we can actually have different uh, because we saw two possibilities, right? So we can get a better entry um, than the original one. That's why we have two entries here in this case. We might even have three, depending on how we see the volume. And I get it now. The price, yeah, the price of the entries cannot be seen. Okay, let me try to fix it. I get it. Okay, now I think you can see it. Let me know if now you can see it. Okay. Yeah, now you can see the price right here on the right side. Okay, so we have these two entries, one at 1.17965 and the other one at 1.7995. Okay, these are the two entries we have. And now we need to get our trade management or exit, negative exit in case of total failure, and our exit in case of success. All right, so we are right now is half hour, first half hour. So we will disconnect from the different streaming area we have. I'm gonna keep only in our website. Okay. So see you guys on the website. Thank you for watching. If you are not, you haven't signed up in our website, you can do it and continue joining us for the rest of the session. Okay. So I'm gonna disconnect right now from the different streaming platforms. I only left for our website. Okay. So see you guys there.